good afternoon. You're tuned into ET now. It's last 1 hour of the trading session today, and the big question Aisha and me are asking is when will we hit the mark of that 20,000 at the index
Kunal
level?
has already said this week.
Let's see whether it happens this week or perhaps today, tomorrow itself. That's the hope that we have at this point of time, because we're just 40 to 50 points shy of that coveted mark of around 20,000 on the index. But forget about the index. The real party and the story is in the broader markets, because that is what has been inching and recording fresh highs on an everyday basis. Of course, from the large caps, it's Reliance Industries, Adani Group, as well as HDFC Bank, which is doing large part of heavy lifting today. But of course, and India VIX too have seen a surge of almost 5 to 6%, telling you that there is a bit of enthusiasm in the market, which is back. It's the PSU banking index, which is sitting at record high levels, so quite a bit of momentum there as well. Power railways, the rally is not stopping at all. Everybody is questioning the rally, but for now, even if you don't have the answer, the stock prices continue to inch higher. And as we were talking about, it's a broader market where the party is, and red flags being raised by even Kotak today, Kotak Institutional Equities, that is, because Sanjeev Prasad is talking about how there seems to be over exuberance in the market at this point of time, to the level that they have run out of options, in his own words, when it comes to the mid-cap recommendations, and that's why they have stopped their mid-cap portfolio completely, because over the last many months they have seen a lot of churn happening as far as the mid-cap portfolio is concerned. But now, except financials, they're not finding much value, and that's why they've stopped that portfolio as well. However, you have the other voice coming in from Ravi Dharamshi, where he put in a tweet saying that it's just wrong to generalize the overall mid-cap, because what you're doing is investing into individual stocks, and that is what you need to track, and rather than just generalizing in terms of the market capitalization. But remains a very, very interesting point for the market, Aisha, whether this mid-cap rally will continue or consolidate.
Oh yeah, absolutely. In pockets, it may be getting frothy or close to getting those RSI level peaks, but we'll chat about that with our experts in just a short while from now. Anisha was just highlighting some of the buzzers in trade, and look at what Adani Ports is doing right now. Of course, there has been a promoter additional stake buy as well, additional stake purchase of about almost 2.25%, and similar has been the price action in Adani Enterprises as well. But both these stocks have been a very, very steady mover. The Global Biofuel Alliance, we were chatting about Praj Industries, has been a winner from the word go. But look at what's happening with the BCL Industries, AKI Energy, Sri Renuka Sugars, in fact, the entire sugar pack. Most of these names are holding out very well. The multinational rail and port deal, IRFC, RVNL, IRCON, the entire railway pack has been a buzz and on a tear, really. And then, of course, there's JSW Energy as well. Economic Times reporting this morning that TPG, TEPCO, Brookfield are in talks for a minority stake. And, just a short while back, there was an additional comment that they are looking at further investments into the renewable energy business, 9% higher on JSW Energy. And the move, by the way, is coming in on the back of almost 12 million shares traded. So let's see which way this stock actually heads from here. In fact, since we're addressing the JSW Energy news, let's just get you some more details. We have the Economic Times reporter, Nehal Chaliwala, also joining in on the show right now to talk a little bit more about what exactly could be in the works for JSW Energy.
So sources tell us that JSW Neo Energy is looking to raise around $500 million from stake sale. It is in advanced talks with TPG, TEPCO and Brookfield. And sources tell us that a deal is imminent with at least two of these three funds in the coming weeks. And the whole rationale of this deal is, if you look at it, renewable energy is a very attractive space for private equity investment right now. If you see, TEPCO already is an investor in renewable power through its joint venture called JERA. And JSW Neo Energy is also decent target because it already has a decent-sized portfolio. It acquired 1.75 gigawatt hours of renewable generation capacity recently. This includes wind and solar. The company will also get the hydro power assets of its parent JSW Energy, and it will also house the group's green hydrogen projects going forward.
Okay, thanks Nehal for that. But the company has clarified to the exchanges that they keep on evaluating various proposals when it comes to the renewable business, and as of now, they have nothing incremental which needs reporting to the exchanges. So that's the clarification coming in from JSW Energy. That is there for you up on the screen. They are saying that they are evaluating, but let's pull up the next statement as well, wherein they say that they do not have anything incremental right now to inform to the exchanges, so not aware of any price sensitive information. But the space which is firing right now is, of course, the public sector banking names. Pull up a Punjab Sind Bank, a Central Bank, a Bank of Maharashtra. These are the stocks which are spiking, and that's the reason your PSU index is at the highest point of the trading session. Naresh, your word as far as the PSU banking index is concerned and your top bets?
So the Nifty PSU banking index has given a breakout in the short term. The top bets which have broken out is Bank of Baroda out of all the names. Can Bank has already moved. And the previous favorite, which continues to be PNB, which has been a relative underperformer in the current whole rally of the last 2 years. So like Bank of Baroda, the stock has given a flag breakout today, could head up towards 220, 230 levels. PNB has a lot to catch up. The stock is still lower than where it was back almost in pre-COVID times. The stock used to be 65. The stock has only managed to reach that point today. That could be a stock which could surprise on the upside, go towards 85, 90 mark. So these are the two names in the PSU banks, and SBI is the last one which I would be watching out, but there's multiple resistances around that 600, 620 mark, which was the recent high. So for now, it would be Bank of Baroda and PNB.
Okay, those are some stock calls coming in from our experts. In the meantime, let's just take stock of some of the other buzzers. Can Bank, Glenmark, HDFC AMC, Idea, we're just seeing a very, very solid spurt there. And then Adani Ports holding out very smartly. Kunal, we were just talking about the spurt in Adani Ports as well as Enterprises. Trade-worthy?
Yeah, I think Adani Ports and Enterprise both are looking attractive. Adani Ports today has specifically given a very classic breakout. And this comes after, I think, almost a period of 9 or 10 months, to be precise. I think it's around 2022 December when the stock had broken past about this 850, 860 levels. And from there, this is the first time that the stock is crossing about those points. So this is a huge comeback for Adani Ports, confirming a breakout. And, the way the volumes are shaping up today, it could be one of the better days of volumes for Adani Ports over that much of time period. So it looks very attractive. Adani Enterprise also could be interesting because the stock has this odd tendency of going into high beta mode whenever the entire Adani group of stocks get into a huge breakout. Stock has broken past about that 2600 barrier, which was also the previous resistance for Adani Enterprise almost a couple of weeks back when the stock had taken a retracement and fallen some 150 to 180 points from those levels. So that also looks very attractive.
Okay, so a lot of attractive, pockets in the market right now. Devang Mehta also joins us on the show from Spark Private Wealth as well. Devang, hi, thanks so much for making time. And we are speaking at an interesting time when we are just 30 points away from the high point on the Nifty, that is the life high. But do you think it's time now that the banking names will lead the rally? At least that's the trend that we have seen in the past week. It's HDFC Bank, Axis Bank. Today, PSU banks are definitely quite active. Do you see the return of the banking names? And if yes, which stocks will lead the rally?
Thanks for having me on ET Now. Good afternoon. Yeah, it's great to always be on ET Now. Yeah, so I think there are a plethora of factors which I was just looking at when you talk about the banking index or you talk about the banking stocks. On the fundamental front, if one can argue, in 2018, the entire banking system together, collectively put, the NPAs were roughly around 11%. And now this is roughly around 4%. With extremely strong credit growth happening, extremely strong capex, government-induced capex as well as private sector-induced capex. I think this is one sector which has sort of underperformed the broader markets in the last, if I can say, last couple of months. It's very heartening to see, as you rightly talked about, lifetime high, but a plethora of factors is leading to this lifetime high, be it macro stability, be it micro stability, be it political stability. And I think sentiment, one can't argue much against the sentiment as well as liquidity. So my sense is, yes, banking sector probably adds a lot of multiplier effect to the economy and vice versa. The sense one gets here is, yes, you can't probably ignore the banking stocks when you're talking about economic expansion for the country led by capex, credit growth, consumption. The sense is that, yes, you need to have certain private banks as well as this is also a time where even a lot of your PSU banks are going to be credit substitutes or going to be helping the economy grow as such and giving a lot of loans to the corporates as well. So yes, this is one sector. A lot of private banks, a lot of PSU banks, certain NBFCs, consumer finance companies. I think all these companies could probably do well. Of course, give and take 5% correction here or there. But most of these banks should be good proxy play candidates to play the economic court.
a big spurt in all the railway names today. Would you be buying any of these names afresh or adding to your existing portfolio positions, or recommend so post the rail and port deal?
I think the message was quite clear when we talk about G20, rail and port deal and stuff. I think most of this seem to be more symbolic right now. But as we go forward, yes, there is a theme which has come out earlier. I don't remember the PSU type of theme or railway. Earlier, if you remember, I think the railway stocks used to do well only before the railway budget, the 10-15 days or 1 month before the railway budget, and the rally used to die down. But this time, I think probably a lot of companies are seeing order growth. A lot of these companies are been executing this order flow, be it metro, be it mono, be it railway signal systems, the safety enhancement features, or the internetization, if I can use that word, of railway platforms. Most of this, I think, seem to be right now in the price. But yes, going forward, I think if capex is going to be the buzzword for government as well as private capex, defense spend for government, railway spend for government, I think this is on the rise. Selectively, yes, there will be buyers in some of these businesses, but not all these businesses for sure.
Okay, so that's a view coming in as far as the railway stocks are concerned, and that's the question a lot of people have in mind. For people who have missed out of the rally, do they start, kind of adding positions into those, or probably it's time to book profits? That remains the big question. But what else is happening in the market? Well, a lot of pockets actually doing all right. We have been talking about the power stocks, which have been on a bull run of their own. Of course, SJVN is one stock which is flying away in the trading session. JSW Energy, the news flow that we just talked about, and Tata Power, Adani Power are some of the other names from that pack that continue to gain as well. Kunal, your view as far as the power stocks is concerned, which is the stock which still has the biggest upside left?
Difficult to say the biggest upside left, but then I think upside is still left for JSW Energy. Even though after today's up move of 9%, R Power, etc., I don't track those stocks, so very difficult to recommend a buy over there. But JSW Energy is something more classic. The stock already went through a 10x move in 2020-22, and then from there the stock corrected by more than 40% or so, from I think 375 odd levels, coming down to as much as 250 mark for JSW Energy at one point of time. And I think after that, time-wise, price-wise consolidation correction, the stock is now looking attractive for a breakout in the long-term chart. So if we go back to the 2020-22 rally for JSW Energy, then I believe that the stock should see at least another 30 to 40% upside, which means closer to 540, 550 could be a benchmark target for a stock like JSW Energy.
Okay, let's also address some of the buzzers which have actually taken a bit of a breather today. So Coal India definitely is one such case in point after a tearaway move last week. BHEL, and I think this must be the first day that the stock is down about 2.6%. And similar can be said about PVR Inox as well, 2% lower on this one too as we speak. Naresh, opportunity like today to buy into BHEL, or do you think a large chunk of the rally is behind us?
So I would not be buying so early into the fall. Fall closer to 130.35 is the price where you want to get in if you want to. And the fact is the stock has moved up from 80-90s to 145 plus levels. So there could be a period of time where the stock could consolidate here at 130 to 150 going forward. So would not be in a hurry. The move has been pretty large. The trend on the longer term still remains extremely positive. So out here expecting some bit of a pause, but closer to 130 is where your risk reward gets into favor. Apart from that, it could be maybe after a few weeks of consolidation, maybe even at 140, 45, after a consolidation would be better.
Coming in on BHEL, 130 is the zone that you can look to buy, and a bit of consolidation in the near term is what you're likely to see. Time now to take a break on the show, but as we do that, listen into the biggest newsmakers of the day. We spoke with the management of RVNL. The stock is up almost 15-16%. Praj, which is the likely benefit of the global biofuel alliance, that stock too is high around 10%. Let's pull up the intraday charts if we can, please. And then, of course, IDFC First Bank, wherein GQG has increased their stake. Listen in to what the three managements had to tell ET Now exclusively.
The timeline which has been given is that within 60 days, all the countries, the representative of all the stakeholders will meet again, and they will draw the roadmap. So nothing more than this is available in the public domain. This will take some time, but it will be a high priority corridor, and this will be executed on very fast track. And every country which are getting associated, the Middle East and all the countries, part of the Europe, they are very keen. Even the US is very keen. I can tell you that in time to come, in within 60 days, the roadmap will be drawn.
And the world is watching as to how a country like India, in a short period of time, through a very structured policy intervention and through a market mechanism, actually transform the whole economy of its energy and its energy basket. We have a very, very significant position in several markets of the world. Latin America, South Africa, Southeast Asia, Europe, even increasingly now in America and now also in Brazil. So we expect that we will be able to further strengthen our offerings, our presence in those markets.
The entire proceeds of 478 crores is being used to purchase options of the bank, exercise the options of the bank, and I'm paying 229 crores back to the bank itself. So currently my direct shareholding and holding in a trust, I also run a social trust which has 50.9 lakh shares of the bank. That's a social trust. So including that and including my direct holding, as of June 30, it was 0.58%. After this transaction, it will increase to 1.04%. So effectively think of it that this transaction is actually increasing my holding, and that's important to note.
Back with closing trades right here on ET now, still counting down to that all-time high for the Nifty futures. Of course, we've scaled it to that 20,000 mark. It's a good solid 140-point uptick that you're seeing. It's Adani Ports, Adani Enterprises, HDFC Life, Apollo Hospitals, Hindalco. These are your big leaders amongst the large caps. And then, of course, there is a great amount of move on an idea, for instance. That's put up about 8%. CanBank is looking very strong with a 6.25% bump up. Glenmark is holding out 4.5%. And HDFC AMC as well, which is looking strong by 6% as we speak. Handful of losers too. And like we earlier flagged off, there's Bajaj Finance, ONGC, Coal India, BHEL, PVR, Inox. Maybe those are some of the drags in trade, but just a handful of them to be precise. But let's take stock of, what else is looking strong other than, of course, banks. And Kunal, sectorally, for the market to push up higher from here, what's going to contribute outside of the private banking names?
Well, auto stocks is something which also I think is one of the key sectors which has a high correlation with respect to the Nifty. And many of the stocks like Maruti, Tata Motors, M&M, etc., many of these stocks do have a decent weightage on the index. IT, of course, is the other sector which also holds a lot of prominence. And the good part about the market this time around is compared to the previous attempt towards the 20K mark, you have many other large cap names which are firing. So, even if you do a relative comparison between the likes of, say, for example, the IT stocks in the month of July as compared to where they are right now, auto stocks like Maruti, where it was in the month of July as compared to where it is right now, there is a relative outperformance which is there into many of the underperforming names. And I think that's adding to the overall market breadth and the market sentiment. So it's not as if that the stronger stocks have gotten weakened. The stronger stocks are going through a time-wise correction, and the weaker stocks have bounced back in this phase of the time-wise correction for these large cap names. So I think that's adding to the overall market breadth. So all in all, looks attractive. And I think other than Bank Nifty and the private sector banking names, it could either be PSU banking stocks, auto as well as IT, which could play a decent hand on the upside.
Okay, it's just 20 points away from that earlier high of 19,991. So we are counting down to that. But just keeping the spotlight a bit more with the banking names and specifically with HDFC Bank. In fact, if we can, let's pull up the dual line chart of HDFC Bank as well as Nifty Bank over the last 5 days or maybe last 2 weeks if we can, and see that HDFC Bank has managed to outperform the index moves. At least that is what the initial data tells me. Today as well, that stock is high by around 0.7%. There are brokerage notes as well talking about how the cost is likely to come down for the bank going forward because HDFC Limited will also get access to the lower cost deposits as well. The growth rate will likely pick up. And if you look at the technical side or even the adjustment factors, this week itself on account of that FTSE readjustment and the Sensex readjustment, there'll be almost $600 million that will come in through, and this will continue over the next 6 months as well because the readjustment will happen in 3 staggered manner. Devang, my question to you is specifically on HDFC Bank. Do you think this one could be now the top bet from the banking space given the stark underperformance in the last 1 to 2 years?
I think yes, we have been maintaining this that this bank is going to sort of now sort of enjoy the economies of scale. The synergies of HDFC and HDFC Bank, which now becomes a sort of a behemoth or a conglomerate in terms of its banking strengths as well as housing finance strengths. Both of them, as they are integrated together, yes, of course, HDFC will benefit from lower cost of funds from HDFC Bank and get to use each other's synergies as well. Yes, this has sort of underperformed. The last couple of years belong to the likes of Axis as well as ICICI Bank, which sort of came out of the oblivion and suddenly had high ROEs, high ROAs, and did exceptionally well. All marks to it. But yes, probably at this point, if there is going to be a bit of re-rating that can happen, it can happen to this business where also there will be flows which would come in. People had sort of wanted to merge these banks and then take a conclusive call on that. I think the overhang out of the story is now over. It's now again on the growth trajectory that one needs to just monitor.
I want to just quickly bring up IDFC First as well. After the GQG buy of 5 crore shares from the MD and CEO V. Vaidyanathan, which happened in today's block, that stock has been fairly resilient at 96.65 in trade. And, you know, V. Vaidyanathan spoke with us as well, telling us that the share sale proceeds are going to be used to subscribe to fresh shares. In fact, if we have that soundbite, let's just play that up and we will, get you more on that. But Devang, if I could just get your thoughts in on IDFC First. Quite a few bullish calls out there on the street. I mean, typically one would think that the promoter bringing down their stake spells bad news, but clearly not the case.
Don't track it too closely, Aisha. I wouldn't be able to comment specifically on IDFC First Bank.
It's about IDFC First Bank, but let's listen into specifically what the management had to tell us.
So sources tell us that JSW Neo Energy is looking to raise around $500 million from stake sale. It is in advanced talks with TPG, TEPCO and Brookfield.
Yeah, we'll come back because I think that was the reporter of JSW Energy. But nonetheless, let's take a look at what's happening in stocks as well, because it's just 15 points away from that life high level. It's Reliance, which is doing the heavy lifting. HDFC Bank is participating as well. And then you have Adani Ports, which is doing quite well for itself. That 7% gain coming in. And Axis Bank too is actually doing all right as well. A 2% gain on Axis Bank. Reliance, of course, is the heavyweight, which is going to, make a huge difference. But the banking stocks too are doing their bit. Even ICICI Bank, for that matter, has managed to perk up in the last few minutes. Nuresh, your thoughts on Reliance and what are the chances that this 20-point, is something that we scale today itself?
So the view is, if not today, then maybe tomorrow with a gap up. But the structure is very clear. We are seeing good participation from large cap heavyweights. So we are seeing a lot of stocks take the participation, especially in the banking names. Axis Bank is coming close to a new 52-week high or closer to an all-time high. ICICI Bank is making a turn. Reliance Industries, which the recent highs were around 2,600, has started turning from the 2,500 mark. Then the whole of even the power PSU names, Power Grid is nearing a new all-time high. So overall, the viewers, we are seeing more participation coming in from large caps. The last time when we were coming towards 20,000, we did not see a similar contribution coming in. So more positive, we could be actually getting into a place where large caps start outperforming the small caps for the extreme short term.
Okay, that's some of the key heavyweights which are chipping in today's rally, counting down to their all-time peak, 24 odd points away from that. SBI, of course, has also been a very strong show today. Anisha just flagged off Axis Bank, which is looking smart. And then, of course, HDFC Bank as well has been a contributor. So is the case with Kotak Bank as well. Nearly a 1% move is what you're seeing on that stock. But Kunal, you were talking about as to how IT also could be a contributor. What makes you so confident? And I'm purely talking about large cap IT names here, not mid cap IT, which have done well in any case.
I have always believed that prices bottom out first and the news flow or the data points, they always turn later. We've seen that happening for the markets in March 2023 lows, as well as what happened, during the COVID time as well. Now, if you look at the price performance of the IT names, most of these IT stocks, and I'm talking of the large cap names like Infosys, which I think delivered second quarter of disappointment in terms of results. But the stock did not break the September 2022 lows, which was created for Infi. And I think same is the case with the likes of TCS, HCL Tech, Tech Mahindra, Wipro, where these stocks, they managed to somehow just trade above, or with a thin margin, they could manage to protect their previous year lows. And now these stocks have already confirmed a breakout of 10-month, 15-month highs, etc. from the large cap names. Now that's a classical sign that prices have started to bottom out first, and hopefully the news flow maybe over the next couple of months, or say in the next 1 or 2 quarters, should start to improve for these names. And I think that's the first critical sign which we typically watch out for, that if the prices bottom out first, they don't hit the previous lows, and in fact they make a fresh swing high, that's a clear case sign of a bottom, or a major bottom being in place.
Major bottom or not, we'll wait by for a couple more quarters to get more clarity, because for now it continues to be half glass full, half glass empty for a lot of these IT counters. But what seems to be reacting to a full glass is the PSU stocks. Look at the run-up that we have seen. In fact, it's up almost 34% since March lows, and my colleague Somit has called out some interesting and baffling data. Let's go across to him to get the context right. Hi Somit.
Well, if you see from the March lows, basic PSU index has run up nearly 34%. That is double than what the Nifty has run up in the same time period. It has gained around 17%. Now, in the basic PSU index, there are nearly 55 stocks. Of them, nearly 3 stocks have tripled in value. 9 stocks have more than doubled in value, while 15 of them have gained more than 50%, which means that nearly 27 of the stocks have at least given a return of more than 50% since March low. Till now. Now, there was only one stock that has given a negative return, and that is Gujarat Gas in the same time period. Now, stocks that have more than doubled in value include the likes of Mazgaon Dock, which has run up nearly 250%, which belongs to shipbuilding defense sector. Then there is IRFC, which has gained over 200%. Cochin Shipyard, which has gained close to 190%. Then there is Ircon, MMTC, RVNL, Midhani, REC, which have gained more than 130 to 150% since March low till now. Now, there are various reasons behind this run up. In fact, there are sector specific reasons, but the common reason around all the PSU stocks was the cheaper valuation and high dividend yield. And sector specific, if you see in the power sector, there was power shortage, which led to higher tariffs and more new project announcements, which also led to order wins for these few of the companies. In defense, it was government's focus towards domestic production, which also led to more order flows coming in from the military and the navy side. And in railways, obviously the rising capital expenditure of railways and more order announcement also boosted the railway stocks during that time period. After this run up, now let's look at how the valuations stand for these few PSU companies. Now, for Mazgaon Dock, the trailing 12-month valuation now stands at close to 40 times, as against its historical average of 17 times. For IRFC, which is a financing NBFC, its price to book stands at close to 2x, 2 times, while the historical average stood at close to 0.8 times. For Cochin Shipyard, it's 52 times. The only stock which has more than 100x P is BHEL, which is if you see the trailing 12-month P, that's close to 106x, while the historical average for this company stood at close to 44x. The valuations have increased now for this for most of this PSU basket, but they continue to gain in trade. So keep an eye out for the PSU basket going ahead.
That we will. In fact, let's discuss some of these names with Devang. Devang, we did discuss the railway pack, but just wanted to understand what is it that you're making of the defense names, what's really happening with the entire shipbuilding segment as well. All of these stocks have seen a flare up. You think there's still value on the table?
I think value, Aisha, is debatable. Probably value, the P re-rating as such, the price to earning re-rating has happened for most of these businesses. Why it has happened? I think the narrative was extremely explained well, that it was one, Make in India, the defense equipments Make in India, something called import substitution, something called efficiently run companies, plus execution capabilities. I think most of this have been showed in the last 3 or 4 quarters, that this story seems to be at least be now dependable on. But the major part is that the most of the stocks have run up ahead of times. Absolutely right when you say that most of these companies trade at 0.5, 0.7, 0.8 price to book. Most of these companies are now around 2.5, and on P basis extremely expensive. But now it's the test is on the earnings front. If the earnings are sustainable, if the cash flows are sustainable, and whether the government has the same focus on capex as well as manufacturing, that needs to be seen. Ideally, it looks like yes, 10 lakh crores of capital expenditure on infrastructure, plus around 2.5 lakh crore on railways, plus on the defense side as well, and Make in India, import substitution, all playing out very well. I don't see extremely bad times for these companies, but one has to be cautious at this levels where stocks have tripled or quadrupled in the matter of 3, 4, 6 months time. So what that caution should be exercised a bit when you get into this type of businesses on stories rather than on earnings and cash flows.
need to be watchful of the momentum that you're getting into. Thank you so much, Devang, for joining us today with your take on a lot of sectors. But just shifting focus and talking about some individual counters, Glenmark Pharma, that stock is up almost 5%. The management commentary suggested that they're eyeing 10 to 11% revenue growth in FY24. They're looking at focusing on free cash generation as well as debt reduction. So that's one stock that we're watching out for. We also spoke with the management of IRB Infrastructure. The toll collection was rather strong, almost 24% growth coming in on a year-on-year basis. And the management maintains that the outlook is also quite strong. They are expecting big order inflows ahead of elections, as well as the construction revenue is expected to jump up. It's off the highest point of the trading session, but nonetheless holds up in the green. Let's go across to our technical experts to get their closing trades and closing ideas as well. Naresh, what's the closing trade?
So that would be Axis Bank getting close to that 1,000 mark, which has been tested multiple times. A classical flat multiple attempts breakout above 1,000 is possible here. So expecting a move towards 1,050, 1,100 in the short.
What about you?
From the auto bank, Hero MotoCorp is something which I would be bullish on at current levels, and I'm expecting that the stock could probably make a good comeback. It's on the verge of breaking past about the 50-day moving average, so that could lead to a decent momentum provided the stock confirms a breakout.
Okay, let's take a very quick break with those closing strategies. Still counting down to that all-time peak, just a little closer to that, 19,975 of course on the Nifty spot. We'll take a break, come right back, track the last half an hour of trade this Monday.
Well, it's a fresh new high as far as the index is concerned. Nifty is at 19,992. 1991 was the earlier high. Of course, it took us a long while to kind of get back to these levels because we had seen that slip come in the month of March. But from there, we have managed to kind of pick up. And in July as well, we had seen that all-time levels coming in. July 20th, 2023 was the time when the last life high was. And now we have finally hit the mark of 19,992, just kissing distance away as far as that 20,000 mark is concerned. If you look at the time taken from the previous record high, it's been 36 sessions. Level of 19,992. 20,000 is just a matter of when and not really if. Sensex is up a solid 500 points. It's Reliance Industries that contributing to that run up as well. And then Aisha, of course, the banking index, the private banks, the Adani group of stocks. These are the ones which are doing quite well for themselves.
Oh yeah, it's actually been PSU banks within the banking pack, right? So almost a 8% surge on the index alone, and then actually it's Nifty real estate which has contributed maximum to the Nifty move. About over a 7% move is what you've seen. Metals come next, and it's actually IT. So, you know, one would have thought that it's going to be a completely reverse picture. Not quite the case. It's actually PSU banks which have led all the way. But Kunal, you think, it's now the turn of private banking names to participate, or will PSU continue to chug along and be the leader?
I think it should be a mix of both. And, Aisha, adding to the point that this market is a lot more vibrant, just look at the way the indices and the large cap stocks, the Nifty 50 stocks have behaved from the previous highs of 19,990. And you have so many fresh additions, Maruti, Z, Adani Ports, there are so many stocks which have actually made a fresh high for themselves on a relative basis as compared to the previous high. Metal stocks have made a phenomenal comeback in this last 1 or 2 months. So I think, looking at the sector vibrancy, I think this time it's a lot more sustainable than what it was maybe last time around. And also adding to the point which you mentioned, on the private sector banking stocks, I think it should be more of a pickup of price action for the large cap underperforming names. I don't expect a very strong uptick on an immediate basis, but I think even if these stocks, like HDFC Bank or ICICI Bank, they pick up maybe a couple of percentage points, who knows, we may be even talking of 20,500 on the Nifty.
20,500 on the Nifty and for now that definitely looks possible. There's no stopping the rally, 19,994. So just 5 to 6 points away, and given the fact that 24 minutes to go, it's more likely than not that we will hit that mark of 20,000. Which is there. We have with us Dinshaw Irani joining us to talk to us about where do we go from here on, because the last time we hit the mark of 19,991, we retraced, there was a long consolidation. But what about this time, Dinshaw? Do things look different this time around?
No, so basically, I remember when it crossed 19,000, you guys had me on the show, and I told you that this is just one of the milestones that you'll see the Nifty achieving. In fact, our feel is that the Nifty is going to have a one-side. I mean, there'll be obviously volatility, but our feel is that the Nifty is poised to break records every year from now on onwards. You'll see new highs, and I suggest that you stop calling people after every 1,000 points. You have to call them after every 5,000 points now. So that's our feel.
Looking for an excuse to talk to you, Dinshaw, perhaps, because we'd love to get more insights from you. But
Sorry,
you know, Dinshaw...
Yeah, sorry.
Sorry, no, I just wanted to get your sense on mid-cap specifically as well, because that is where I think there's a lot of problem area for the fund managers like yourself as to where to deploy the money.
Yeah, actually, you're right, because the problem with the mid-cap is that there's only 150 stocks in the mid-cap as identified by MC. So now so much of money flowing into these 150 stocks will obviously there'll be a level where you finally say that, okay, I don't want to invest at these prices and these valuations. So they look pretty stressed. But in the case of at least small caps, you have anything beyond 250 stocks is small caps, right? So you have enough and more to choose from. So that's not a problem area, but you're right about the 150 bit, the mid-cap bit, where there will be an issue. And that's why we believe, in fact, we've been doing that in our portfolio at least, trimming out names where you think the valuations have reached limit levels.
Dinshaw, so if we have to talk to you next when the Nifty hits 25,000 because you want to talk to us after every 5,000 points, tell me what's going to be the picture like and what's going to be the contributor from here onwards?
So basically our feel is that the way our index is, at least that's what we believe, that if you're looking at a normal GDP of 11% growth in the next 4-5 years, you're talking about index at least giving you a return of 14 plus kind of % over the next 4-5 years. So you can very well do the math out here that every year you'll see roughly around another 3,000 points being added to the Nifty per se. You're talking about a 14% kind of growth as such. So that's what my call was, that our feel is that our valuations are at limits. As you're at 18.5 times 1 year forward earnings, which is very much in line with your last 7 odd years. I'm basically talking about the post-COVID kind of, post-demon kind of period. That's when really the equity culture caught on as such. So I don't see our markets getting stretched at all at these levels also.
High levels will just keep on coming. That's the word coming in. But Dinshaw, is it time now to probably book some profits from the railways, the PSUs, the power stocks? Because it's giving a lot of us anxiety as to why these stocks are running. Until when?
Actually, right, because our feel also was the same, that wherever you see a froth happening, and obviously the ones that you mentioned, there seems to be a lot of froth, more of money chasing limit and a lot of stocks that is really working out here. But at least in the large cap space, I don't think the market has rallied as much as we would want it to, given that the small and mid caps have rallied around 35 odd %, 35-36%. I think the indexes are up over the year, and while the large cap is not up so much. So obviously there'll be pockets where you need to book out, and there'll be enough opportunities and more in the market to get into newer names where you think the valuations are reasonable.
Nilesh Shah as well joins in on the show right now. Nilesh, hi, afternoon, and welcome to the 20K party. We've got Dinshaw Irani as well from Helios, and he says that, we should stop making all this hue and cry about 20,000 and not talk to us after every 1,000 point, but next 5,000 points. So he's quite convinced that it's going to be 25K also on the Nifty soon. But tell me, in the near term, Nilesh, do you get the sense that maybe we're getting a little frothy, at least in pockets?
Undoubtedly. There are, as you go down the market capitalization, clearly stocks, instead of becoming cheaper, are becoming expensive. The micro-cap, mini-caps today trade at higher valuation than large cap. The SME exchange trades at higher valuation than large cap. These are typically the signs where one needs to exercise caution. If the risk-reward ratio I have to see, I'll say they are better towards larger cap companies than towards lower cap companies.
Okay, so that's the take coming in, Nilesh, as far as the market is concerned. But is it fair to say that the banking stocks, the hiatus and the underperformance is likely to get over now? The ICRR is out of the window, inflation is under control. Good news coming in for the banking stocks and private PSUs alike?
I think there will be a catch-up game in banking stock. Today they are suffering underperformance because of over-ownership. Most of the institutional investors had large exposure over there, and some of the retail HNI might would have started booking profit from banking stock to go into other momentum stock. But this has widened the valuation gap. This has created far better risk-reward ratio in banking sector compared to, let's say, other momentum stocks. So some sane capital, sane money will start getting relocated from lower cap stocks towards banking sector.
Banking sector catch-up is likely to play out. But talking about catch-up, Dinshaw, do you think there is a chance for IT to catch up as well? While banks were over-owned, it's IT which is under-owned right now.
No, actually, IT has done fairly well as of now, despite all the problems that it's going through. In fact, I don't think the IT index has corrected at all from the year-to-date basis. Last I saw, it was outperforming the Nifty per se. So I don't think that's going to be an issue. But our feel is that, again, as I said, that frothy, and in fact, Nilesh also mentioned the same, that there are pockets of frothy valuations, and our belief is that IT is one of those pockets, because anyway, you may see the valuations at 25, 26 times forward earnings for all the large cap, but look at the mid caps and the small cap names. They're at 40 plus kind of valuations, which pre-COVID levels also weren't that much. I mean, they were in fact half those valuations per se. So our feel is that there should be some reaction coming into that pocket itself.
Would have thought that it's actually the Nifty PSU Bank which would be the largest contributor, and almost an 8% move there. And then, of course, there's Nifty Realty and Nifty Metals, which have contributed to the rally from the August lows up until now. Having said that, Nilesh, do you feel that the construct of the market could change from here onwards? You know, what Anisha was just flagging off, that maybe IT and underperformer sectors like pharma could actually take the lead? Or do you think the baton is going to be held by PSUs?
I think there will be change of the baton. Some of it will be driven by events like when does US Fed pivot. If rate cuts happen earlier than expected, then the baton will shift from PSUs to maybe financial services, including PSU banks. If rate cuts are delayed, then maybe some of the defensives like pharma or FMCG will do well. We are also looking at monsoon deficiency. One will have to see what happens in September and how does inflation and rural recovery plays out. And then finally, we will also see impact of election cycle. Generally, we have seen ahead of election cycle, there is more money in the pockets of consumers, especially at the bottom end of pyramid, as government spends money. Now, this should benefit consumer staple or consumer goods company. So there are events from US Fed pivot to monsoon to election, and there will be certainly change in the baton. There will be sector rotation undoubtedly.
Yes, but Nilesh, tell me about when do we see that 21,000 or the 25,000 mark that Dinshaw was talking about? Likely to happen soon, or we'll have to wait a long while like we had to did for 20,000?
So as George Bernard Shaw once mentioned, it may happen in Jan, if not Feb, March, April, May, June, July, August, September, October, November, December. Just don't ask me the year, but it will happen in one of those months for sure.
Sure, it will happen in one of those months, but given that pre-election rally is what all of us are waiting by, probably it'll happen sooner rather than later. And talking about that pre-election rally, Dinshaw, what's the take as far as industrials is concerned as well? L&T was sitting at record high level. There's this entire G20 push which has come for, the biofuel alliance as well. That means more work coming in for these, some of the industrials, biofuel equipment manufacturer as well. If I had to ask you top bet within that, what would be the pick?
Well, actually, you're right about the fact that the capex guys will be benefiting also going forward, because but one has to keep valuations in mind constantly here also. The fact is that the last three cycles of capex got deferred thanks to one was central elections of 14, came demon, and then came COVID. So that itself is getting clubbed together, and obviously consumption has picked up pace. So there has to be capexes which has to kick in. And that, I believe, is on the way in. I mean, if you heard all the commentary of all these companies that came out with the results for the June quarter, they're all talking about upping the capexes, guidances as such. So that obviously has kicked in a bit. But again, one has to be very careful here, because already quite a few stocks have run up way beyond their valuation limits as such, according to us. And the name that you mentioned basically is in all kinds of capexes across, be it on roads or be it on ports or civil or commercial and stuff like that. So I think that's the best way to play it out. We have L&T in our portfolio and continue to hold.
Dinshaw, Nilesh, both of you, thank you so much for taking the time out and joining in the celebrations on D Street. 20,000, as unbelievable as it may seem like, but it's here on the Nifty. So, Kunal, you thought it's going to be this week. It happened today.
Yeah.
From
But
28th September,
now?
it came down to this week. Now it's to today. But
But
what
it's
about...
a pleasant surprise. It's
yeah,
good.
more than happy. You're
Celebrations
happy to be
early.
wrong when it comes to things like this.
Exactly.
Absolutely.
Such celebrations always.
So, what next then, Kunal?
So I think now, tomorrow, maybe day after, we should be looking at 20,400 as the target.
Wow.
Because when you see such kind of a strong breakout for an index, we've seen historically that stocks, asset classes, they generally tend to speed up momentum. They don't stall at the previous highs. And just as an example, for example, Maruti, when it hit that new high, the stock went up by another 4% in the subsequent day. So I'm expecting at least a 2% rally for the index, hopefully tomorrow itself.
Dipan Mehta is also with us. Let's take his view. Dipan, we keep talking to you as and when all of these fresh highs are made. The Sensex, the Nifty mid-cap has been making fresh record highs. Where do we go from here on? Is there any amount of consolidation or profit booking that one should do? Or do you think this euphoria will continue in the markets?
Thank you for having me on your show. And I've been hearing all the veterans before me air their views. And I think everybody in the market who's been around for a long, long time, who basically relies on fundamentals for his judgment calls, has to say that, look, the market has run up a bit too fast, too high, and some amount of consolidation, correction will happen. When it will happen, we don't know. But we are seeing more and more trading positions being loaded onto the market, and leverage positions also, I suspect, are coming through. So it's a situation where it is, I would say, near about entering a parabolic zone, which means that from here prices can easily go into some kind of a bubble territory. So I want to just go with the veterans and add the same level of caution that these are not levels to buy stocks. Of course, there'll be a few odd stocks which are still at attractive valuations, which have not run up. But by and large, if you are chasing the momentum stocks at these levels, you may be in for a root shock. So it's time to be a bit cautious and let there be a time-wise correction, price-wise correction, and then maybe assess whether it's worth investing in stocks. At these levels, a lot of stocks do not have margin of safety, and a new earnings season will start in about 4 weeks' time. And if there are a few negative surprises over there, then we could have an exaggerated correction as well.
Some alarm bells there, Dipan, I must say. But, needless to say, this is not the time to put fresh money to work. But where would you take profits off the table? Because you've made money pretty much across the board.
See, I think that's also a difficult question to answer. And if you just trim your portfolio, which also I heard one of your experts say, trimming is what? If you've got 100 shares in a stock, sell 10. That's trimming of the portfolio. So rather than taking a call on which sector and which stock, we just try and reduce the exposure especially stocks where you have excessive exposure, like 25-30% of your portfolio in a single stock. Maybe it's good time to sell 5-10% of that holding. So that's kind of strategy. I think selling is a very difficult proposition. We all know that, but nonetheless, I think one needs to indulge in it from time to time.
It's not the question of what to buy, at which the street is, tackling their brains with, but it's also the fact what to sell right now, because there's this big FOMO feeling. You sell the stock and then the next day it rallies by 10 to 15%. But Naresh, your take on the market as well. 20,000 is there. Kunal believes that 24,400 and 20,500 is the next level to watch out for. Your take?
So similar take, like we saw the bottom happen right on the MSCI selling day. This rally has crossed 20,000. The last high is 20,000. So a minimum take is we go towards 20,500 odd levels. That would be a minimum target price. Also for the flag, which was 600 points, comes to 20,300, 500. So that's the take. We should see an extension towards those levels. So overall positive, we could see new leadership continue from the banking space, and we are seeing that a lot of new 52-week highs. So the bias remains positive as it has been for a long time. But 20,500 is where I would be looking to book profits.
Right, we also have Hiren Ved joining in on the show right now. Hiren, the magical mark is here, an all-time high, 20,000. But I think the summary of all the experts that we've been speaking with so far seems to be tread with caution. It's getting a little frothy right there. Would you agree with that, or would you say just ride the trend?
Well, I think one should always be cautious, because when the markets are in this kind of a bull fervor, there are always some pockets of euphoria, which is usually there in some small or micro cap names which are not backed by fundamentals. But other than that, I think I have no doubt that we are firmly in a bull run. Yes, there can always be corrections in this bull run, but I think the trend is firmly in our favor. And I don't think we should be afraid of this bull market at all. And I think investors, if you are invested in well-researched companies, good fundamentals, I think you should stay invested. The clear message is you should stay invested.
But Hiren, which is that space which still gives you the upside to ride this momentum? Is it the banking names which were underperforming? Is it IT which was a bit underowned? Which is that pocket where you see value right now?
Well, I think it's difficult to kind of call out sectors. Definitely, I think if you were to just generally talk about it, I think large caps in general, from a relative perspective, there is still value, because obviously small and mid caps have had an uninterrupted run from April onwards. And usually there in this kind of a bull market, market takes turns, right? So stuff which has not done well tends to do well, because there is always mean reversion that happens. But I think, as I said, and as everybody has been rightly cautioning, that not to get carried away in the momentum. I think there are still opportunities in a lot of areas. I think specialty chemicals, agri, IT services or tech, I think those haven't moved as aggressively as what the industrials have done. So from a risk-reward perspective, there is opportunities. But I think the message is that if you are invested even in some of the leading sectors like industrials, capital goods, power, you should remain invested in those sectors as well.
Sanjeev Bhasin as well joining in. But Hiren, just a last question before I let you go and wind up for the day. Spaces that you've been pretty bullish on, and not in the near term, but you have been for the long haul as well. I mean, the entire ethanol play, right? The renewable energy play. Now you've got the global biofuel alliance as well coming in. Do you think these trigger-based, news-based stories also is somewhere that one needs to stay put?
Well, I think, the renewable energy story is for real. And I think the Global Biofuel Alliance is a big opportunity. There are very few stocks to play that, but I think that the ones that are there should see a very meaningful expansion in the opportunity set, not just domestically, but I think there should also be expansion in opportunities globally, because US, Brazil, and many other countries are significantly large in ethanol. And, it's not just related to ethanol, but it could be sustainable aviation fuel. It could be compressed biogas. There are several opportunities, and a lot of companies in that value chain should be able to increase their addressable market. So yes, it is a very clear opportunity, and there will always be positive news. There will be asymmetric rather than the stock market, but I think from a longer term perspective, these are real revenue and profit opportunities for companies.
We'll let you go. Thank you so much for making time and celebrating with us this important mark of 20,000 on the Nifty. But 20,000 on the Nifty is something that Mr. Bhasin had told us just a few days ago that it is likely to happen in September. And here it is, Mr. Sanjeev Bhasin.
Yes, Anisha, good you remembered. I told you it will come in the next week itself, and it's come faster than I thought. So it tells you that the feeling of mist house is humongous. And now after the huge rally we've had in power, stroke defense, stroke PSUs, it's the turn of the index heavyweights. And I think this is just starting. So there will be a little bit of volatility because of inflation numbers in the US and XYZ. But India purely is an outperformer, and I think now on the benchmark is set. So if there was one milestone of 20,000, you've done that. Now it's going to be stock sector specific. But ownership of stocks is again what makes wealth, and that's why you have to just stay put. So yes, 4 or 5 names I can quickly give you, which I think can still outperform, and I think we'll enjoy the party.
Go ahead and give us those 4 or 5 names, Mr. Bhasin, that you think that one can still buy and make money on.
Yeah, hi. So Aisha, it is Apollo Hospital. I think that is headed. Look at the average revenue per operating bed. They've guided on a 15% growth. So 5,100 is no barrier. This is going to 6,000. Reliance itself now with everything under its gamut, and now the new talk with the NVIDIA. I think this should be re-rated 2650 on Reliance. Havells will be another very big, very, very close pick. It's one of my stocks which I own from 25 years. And Havells guidance is extremely positive. So I am looking at something like 1650, 1700 on Havells. The fourth one would be Vedanta. I think this London listing and access to capital Vedanta will be able to assess that, and they've got everything in commodities under one belt. And last but not least would be my favorite, which I gave you as a dark horse at 90, Tata Tele. It has just hit 101, but this stock is going to 140 in this calendar year.
Despite the kind of run-up that we have seen in the mid-cap stocks, these are the gems that Mr. Bhasin is still identifying for you and calling that there is upside on that. Mr. Bhasin, as well as Dipan, thank you so much for joining us and talking to us on this important day, and even our technical experts. But before I let them go, let me quickly take the BTST ideas. We're just at that 330 mark, but let's quickly run through those picks. Kunal, you go first.
PNB is the buy, target 75, stop loss at 66, and L&T Finance for a target of 140, stop loss 127.
Okay, 2 buy calls coming in from Kunal. Naresh, I'm guessing the list would be all buys from you too.
Yeah, so it would be Axis Bank and IndusInd Bank for BTST.
Okay, banking names, these were the top bets coming in, and no surprise given the momentum that we saw on the banking names by the end of the trading session. Of course, the PSU banking names were doing quite all right, with the PSU banking index hitting that record high level. But the private banks also joined the party in the last half an hour, 1 hour or so. Look at an Axis Bank, an HDFC Bank, an ICICI Bank. They were all rallying in the trading session. Of course, your top gainer at the index level was Adani Ports, doing quite well for itself, and that stock was up around 7%. The second biggest gainer was Adani Enterprises, which was trading high by almost 4%. There were some losers. L&T was seeing some profit booking, Coal India, Bajaj Finance, ONGC, but only 4 stocks of Nifty actually ended in the red. Having said that, sectorally the trend was very, very positive, barring a couple of small sectors. It was all green on the screen. The biggest gainer, of course, coming in terms of sector performance was PSU Bank. So Bank of India, IOB, Canara Bank, Punjab Sind Bank, Maharashtra Bank, they all rallied over 5% and PSUs across the board. So whether you pick up a railways sector, a power sector, all of these stocks are firing away in the trading sessions. Of course, the broader cap and the mid cap rally really continued, but large caps too participated. And the good news seems to be, Aisha, that we're ending at just that 20,000 mark for Nifty. Again, of almost 1% coming in for the Nifty today.
Yes, and our chartists assure us that this is not it. Tomorrow as well, it's going to be another party. So we'll see you again tomorrow morning at 8 a.m. Thanks very much for watching.